So far in this series, we have looked at three major asset classes: financial assets, real assets, and business assets. But as you explore the world of investing, you will discover something interesting. And that is that not every valuable asset fits neatly into these categories. Some assets sit outside the traditional investment framework. We call them alternative assets. Alternative assets. Now, let me ask you something. Why would someone pay millions of naira for a painting, or a rare watch, or a vintage car, a trading card, or a digital collectible? After all, none of these things produce cash flow. Yet some people treat them as investment. Why? Alternative assets are assets whose value comes primarily from scarcity, desirability, uniqueness, or market demand, rather than traditional income generation. In simple terms, what we're saying is that people value them because they are difficult to obtain and other people want them. So now, how do we understand this? Now, when you buy a rental property, you earn rent. When you buy shares, you receive dividends. When you buy a bond, you receive interest. But when you buy a rare painting, it typically does not generate any income for you. But what it does is that the value can appreciate in the future, and you may be able to sell it for a higher price in the future. So the value depends on someone else that may want to pay for it in the future at a higher price. That is what makes it alternative assets. And for most people, that's not a place to start. It's an asset that you can look into when you have your legs on other income assets and you are looking for other places to diversify into. Now, let's look at some common examples of alternative assets. Number one is collectibles. We call them collectibles. They are items that people collect because of their scarcity and significance. Examples include rare coins or trading cards. Now, the second one is fine art. This one's, a lot of people know this: paintings, sculptures, and other artworks. So people can put value on them depending on the artist, depending on how scarce they are, depending on the historical importance. So things that have significant historical importance, people place high value on them, and people buy them like that. Luxury watches are another collectible. Certain models, such as Rolex, they have a lot of values over the years, and they're able to maintain or even increase their value due to scarcity and demand. Another one is vintage cars. So there are some classic vehicles that become highly valuable because of there are just a few of them that remain over time, and the few that remain, people are looking for them and they want to pay a huge amount for it. And of course, we have the most recent ones that everybody's talking about, which is digital assets. They are also a form of alternative assets. So most alternative assets also include digital collectibles like cryptocurrencies, right? Such as Bitcoin, Dogecoin, and Ethereum, and many other coins like that. So they are modern alternatives that people also put their money into. And they derive value largely from market demand, from network effect, and from scarcity. Now, you would want to ask, why would someone want to invest into this kind of asset class? Now, there are several reasons why people invest into alternative assets. Number one is diversification. Alternative assets often behave differently from stocks and bonds. So some people may want to use it as a means of diversifying their asset classes. Number two is scarcity. Some assets become more valuable simply because there are very few of them available over the years. So people can keep them in order to sell them later because of scarcity. Number three is passion. Sometimes investors want to enjoy owning something that is different because they appreciate it personally and because it means something to them. For example, a watch collector may enjoy the watch because it is something that they love, even though it may or may not increase in value over the years. And number four, of course, is potential appreciation. In some cases, rare assets can experience significant increase in value over time. We've had cases when a particular thing just started making wave and everybody is asking, if you have this thing, they want to pay a huge amount of money for it. And for people that have it, they're able to collect money from it. So alternative assets can appreciate significantly and you can earn a lot of money from it. But it comes with a lot of risks. Number one is valuation risk. How do we exactly know how much is worth? There is no way to exactly put a value on the worth of a painting. It is the value that the seller places on it. That is the worth of it. So there's no specific way to say this is the value. Number 2 is liquidity. It can take a lot of time to sell them off. They are not things that you can sell when you need money urgently. So finding the right buyer for the right price may be very difficult for alternative assets. Number 3 is authenticity risk. Now, a lot of counterfeits exist for some of these things. So how do you exactly know whether this painting you are paying for is the original painting by the said artist, or it is just a counterfeit? That is a challenge with alternative assets. And number 4 is demand risk. An asset is only valuable if someone is willing to pay for it. So it can take a while to get them to sell. And of course, there's a lot of changes in taste and trend, and they may affect the value of your alternative assets. So that is something that is very important for us to pay attention into. Now, where do we fit alternative assets? For most investors, alternative assets are not the foundation of a portfolio. In fact, it is not advisable that you start with alternative assets. They are usually a complement. The foundation is usually built, so you ensure that you have human capital, financial assets, business assets, and real assets. Then you can now have alternative assets as a means of diversifying. So alternative assets remind us that value is not determined only by income. Value sometimes comes from scarcity. It comes from culture. It comes from history. So if something has a huge, significant historical background, the value may be significant. The value can be high. So that's it about alternative assets. Now let's move from external assets and let's move into internal assets, because you are your greatest assets. So the most powerful asset you own is not something outside of you. The most powerful asset is something that is within you. So in the next episode, we shall talk about human capital. That is your greatest assets. Thank you.